Welcome back to the channel, everybody. So I'm back this week. I was sick the last week, so that's why I didn't put up a video, but now I'm back and gonna keep up with the updates. So the market's been pretty choppy as of late, but as of today, at least on Thursday, the market actually had a pretty good rally, pretty big green day, and the market is up today. So we're up 2% in the portfolio just in the past day. We're still getting up 340 in the last week, down 3% last month still, so still negative overall. Past 3 months we've lost 4%. For the year we're about neutral, and all time we're up $300. So we're back in the green. We were actually in the red for a little bit, but the stock market seems to be recovering, but we'll see if it lasts. So if you want to follow along with my weekly updates, my buys and sells, just subscribe to the channel and leave a like. And with that said, let's roll the intro and get on with the update. So the biggest change since my last update is that I actually bought 3 more shares of Apple. So we went from 4 to 7 shares, and I reinvested the dividends, so we're up to 7.25 shares. Since Apple has fallen below what I think is its fair value, I think like around 160 or so, at least in my opinion, is a fairly good price for a good market-beating return. So I do really like it at this levels, and I took this opportunity to get a lot more Apple. It's now my second largest position after TD Bank. There's a lot to like about it, just the quality of the brand, the fact that they're going to buy back $90 billion of its own shares, giving you more ownership of the company, and increasing their dividend every single year. Lots to like about this company, and I really wanted to focus on it and make it a core holding while the price was down. So I definitely liked getting it in the low 140 range. So we're slightly in the red on this one, but I'm very happy to pick up Apple. So that's one thing you should do when the market goes down, is just really focus on your highest convictions and start building and concentrating some positions. That's one of the advantages of a down market, is that you can shape your portfolio the way that you want when everything's up. At least the way it was a year ago, I didn't have as much freedom to pick good stocks, just because I had to pick things that were relatively good value because everything was really expensive. And as you can see later on, that really hurts you, especially in the non-dividend paying growth stocks. Those have taken a colossal beating. Algonquin actually raised their dividend by 6%, so they had pretty good earnings. This company is just quietly growing in the background. Not much movement in the price. It's down a little bit, but it's actually been holding on fairly well, considering some companies have lost 50% of their value. So this one's just a slow and steady income producer for us. So I bought another one, going up to 43 shares. Alibaba actually presented really good earnings, so they went up like 14% just today. And the key thing from their earnings report was that Alibaba Cloud, their cloud services division, actually finally turned a profit. That's really impressive because this is losing money for Alibaba every quarter. So the fundamentals of Alibaba have improved, and even Google Cloud isn't profitable yet. So that's really impressive that Alibaba has already made it a profitable segment of their business, and it should just help them in the future. And surprisingly, despite all the lockdowns, it's just proving the power of Alibaba, that the fact that China can be locked down and they can still perform and still grow their revenue. So very impressed with them. I think I just have to hold on to this one, and with a bit of time, I think that this one can dig itself out and put us back into the green. With Brookfield, I decided to go from 10 shares to 12 shares. So this fell to the low 60s. I decided, this is a great time to stock up and get more Brookfield. So I bought 2 more shares of this. I want to keep this like one of my larger positions, so I'll definitely be buying it if it's going to stay down at these levels. And Scotiabank actually raised their dividend by 3%. So we're getting $1.03 per share every quarter instead of $1. So nice little dividend raise from Scotiabank. And they had pretty good earnings. One key thing I'm going to note from their earnings report was their international market revenue jumped from 400 million to 600 million. And this is a key reason why I chose to invest in Scotiabank over some of the other Canadian banks, because of their exposures to Latin Americas. As you can see, that's like a 50% increase in revenues just from that region, just from their international. So they have a lot of growth potential internationally, and they're focusing on markets that the other banks just aren't focused on. So that's just something unique to Scotiabank, and that's why I really like them. And the fact that they pay almost 5% dividend yield doesn't hurt either. I also picked up a little bit more of the Ethereum ETF. So cryptocurrency's been absolutely destroyed. So I'm going to buy a little bit more of this just while it's down, just because the yield is absurd. It's like 25% or 30% monthly dividend payer for Ethereum. So I definitely want to keep it a small position just because of how volatile it is, and it really doesn't have a floor, unlike a solid company, and that's why I don't really love having like a non-productive asset like gold or Ethereum. But if it pays me a dividend, I'm fine with it in the portfolio. So this is how I choose to have my little crypto exposure. So very small position in the portfolio, just giving us monthly income, helping us with our goal of just creating a stream of passive income. So money while we sleep. Bought a little bit more, tiny bit more Google. So we bought a little bit more of this as it dipped a little lower. HYLD I actually loaded up on. I'm up to 65 shares just because this is paying a really good monthly income. And the yield actually went as high as like 12%. Now it's paying like 11.5, 11.6%. And it's a monthly dividend payer. So this is just like 7 US listed ETFs, just all covered calls, just producing really, really high income and hitting our cash account every single month. So I decided to load up because 12% yield monthly is really good. And we also, I picked up a little bit more Microsoft, just a tiny bit more. I kind of want to focus on this one if I can. I'll definitely be adding to this as the market recovers, just because I think it's at a decent value. I think Apple was more of a deal. But now that I've loaded up on Apple, I definitely want to increase my position in Microsoft a little bit. And Power Corp of Canada actually fell quite a bit. So they didn't do too hot in their earnings report. They actually made less money than last year. But one thing to note is Manulife Financial also had a kind of a lackluster earnings report. So it could just be a bad quarter for insurance businesses, or just like an off quarter, off year. So we'll see what happens to them in the future. But right now this one's paying like a 5.5% yield. So I kind of want to wait and see like what they do next quarter before I buy more shares of this. Because I'm definitely more confident in like the banks, at least, because they at least increase their revenue from quarter to quarter. So this one really disappointed me with their earnings report. And Smart Center's at a pretty decent price. I kind of like it under the sub 30s, so wouldn't mind adding to this. TELUS has just been rock solid, hasn't really dropped or anything. And TD Bank also had pretty good earnings. They beat their earnings from last year, but no dividend raise. TD doesn't raise their dividend more than once per year, so probably going to get this dividend raise probably at the end of 2022. Whereas all the other banks do like either 2 times a year or 3 times a year. They'll like raise their dividend by small amounts. So that's fine. No dividend increase from TD, but we'll get that later on at some point. And I bought a little bit more Tesla just because it hit like $666. And, it's just a sign that Tesla's is an evil company and I need to own more evil in my portfolio. And so that's what I did. And then for the dividends earned, we've earned $526.71. Our annual dividends went way up from the last time I did my last update. So from $718 to $751. So about $32 of additional income hitting my portfolio every single year. Monthly, we went from $59.90 to $62.60. Great increase there. Weekly, we went from $13.82 to $14.45. And daily, we finally hit our goal of reaching $2 per day of passive income in the portfolio. So we went from $197 to $206. So this took us quite some time. I'm pretty happy to hit this number finally. And now my new goal is to hit $3 a day in dividend income. So to do that, we just have to hit about $90-ish or so per month, every month, and we'll hit $3 a day. And then once we hit that, I'll try to hit 4, and each additional dollar will be easier than the last. So we're gonna watch our snowball grow literally a dollar at a time, and eventually it should be enough to make an impact in my life and pay some bills or replace my income. I just have to keep contributing and buying into the market. So yeah, it's not a bad time to start investing. So if you'd like to join my link in the description for Wealthsimple, if you sign up using that, you can get the value of a free stock worth up to $4,500 if you fund a personal account. And thank you so much for watching the video. Leave a like, leave a comment. What are you buying in the downturn? And how's your portfolio doing with all the volatility? All right, have a good one, everybody.